Only 4 out of the 50 largest metros in the country are seeing strong new home sales right now. And guess what? San Diego is one of them. While builders in Texas and Florida are tapping the brakes, ours are still moving million-dollar homes. But is this a sign of strength or a warning? Stick around to find out more. If you're waiting for mortgage rates to drop before making a move, you're definitely not alone. Most American homeowners feel completely locked into their current rate, and buyers, most say they won't even think about making a move until rates drop below 5%. But here's where things get a little wild. Millennials, yes, that same generation we love to roast for killing off napkins and cable TV, are stepping up and buying homes anyway. Despite high prices, high rates, and high anxiety, they're moving forward. This new data from Realtor.com is surprising, a little confusing, and it absolutely matters, even if you're not a millennial. So let's talk about what's going on and why it could impact you next. This and more covered on this week's San Diego Market Matters, and I'm Karl Kyler, your San Diego Realtor. If you're enjoying the updates in these weekly market reports that I bring to you, be sure to like and subscribe to the channel so you can stay up to date on all the happenings that are going on in the real estate market. And if you're thinking of buying or selling here in San Diego, I have my contact info in the description below. People like you are reaching out to me regularly for help. Let's connect and see how we can make your next move happen for you. Now, let's get into the good stuff. First off, your market update. We had 2 inflation reports post this last week. CPI, the Consumer Price Index. This is the inflation that we feel on our dollar. And the PPI, the Producer Price Index. This is the inflation that the wholesaler or the producer feels. In both reports, inflations came in below expectations.
Thank you, Jesus.
PPI is important to take notice here because this is where the impact of tariffs will be felt first. And at the moment, there's very little impact present despite having collected almost $69 billion in tariff tax in the first 5 months of the year. That's a 78% increase over 2024, and $23 billion of that was collected in the month of May alone. That's 270% increase over May of last year. It's still early on, so I'll continue to keep you posted on this inflation reading as it drops. As for CPI, it also came in below expectations. CPI is now sitting at 2.4% for all items and 2.8% for core CPI, which is CPI minus food and energy due to their volatility. Mortgage interest rates came down sub 7%, but we'll see how long that will actually hold there. And the Federal Reserve, they meet this upcoming week, and no Federal Reserve cut is expected despite all the news and banter coming from President Trump and Vice President Vance advocating that rates need to come down. Now, let's move on to the recent new construction trends and how San Diego is not falling in line with them. All right, let's talk about something you're not hearing a lot of: good news. While most of the country's new construction market is slowing down, like brakes squealing, price dropping, slowing down, San Diego is one of 4 major metro areas in the entire US where new homes are still flying off the shelves. So what makes us so different, and how long can it really last? Let's talk about it. Nationally, it's been a pretty rough spring for home builders. Over half the US markets have been rated as slow by John Burns Research and Consulting, meaning that sales are down, incentives are up, and price cuts are becoming the norm. But out of the 50 largest metros tracked in April, only 4 were rated as strong for new home sales: Indianapolis, Chicago, Orange County, and yep, San Diego. That's right. While most of the country is cooling off, builders here are getting it done. Let me give you some context on what strong market means in builder terms. In a weak market, builders are luckily close 1 to 2 homes per community per month. But in a strong market like ours, we're seeing 4 to 5 sales a month. And they're even raising prices in some cases. And that's not happening in most of the country.
What the heck?
And if you're wondering, yes, we were actually rated very strong not too long ago, but we were recently downgraded to only strong. Still, compared to the rest of the country, we're doing just fine. But the main question on your mind is probably, why is San Diego still hot when builders in Texas and Florida are feeling the chill? 2 words: undersupply and desirability. Simply put, we don't build a lot of new homes, and the ones that do get built, well, they're usually priced for a higher end market. In fact, the median sales price for a new construction home here in San Diego is over $1 million. That's not exactly starter home territory, but people are still buying because it's San Diego, and demand at that level remains solid. Now compare that to places like Dallas, Tampa, or West Palm Beach. There's more inventory, there's more incentives, and there's more price pressure. Now, this doesn't mean our market is bulletproof. Affordability is still a major issue here, as I've discussed on this channel multiple times, especially here in the San Diego Weekly Market Matters videos. We've got high interest rates, The resale market is softening, investors are backing off, and the international buyer activity, we used to see quite a bit more of it. Even in a strong market, builders are having to work harder to close deals, and they're watching the data extremely closely. Here's the bottom line. In San Diego, we're still one of the top performing new construction markets in the entire country. That tells you a lot about how supply constrained we are and just how much long-term demand still exists. So what does this mean for you?
I want to know.
If you're buying and looking at new construction, know this: prices are holding fairly well, and you shouldn't expect as much negotiation leeway with a builder as you would with a resale home. Builders might offer some incentives, but with limited inventory and healthy demand, don't expect bargain bin deals on new construction. If you're selling an existing home, this is your competition. New homes are move-in ready, they're energy efficient, and in many cases, they're priced similarly to resale. So if you're going to compete, you need to show value, whether that's through pricing, presentation, or offering credit. And you don't have to throw a credit equivalent to the cost of a brand new Tesla Cybertruck. Just offer something strategic that makes the buyers stop scrolling. Thankfully, in San Diego, though new construction is aggressively competing with our resale market, we don't have a lot of new construction all over San Diego happening, so its impact is very area specific. And as I mentioned earlier, new construction tends to be more luxury based, so it's area limited and also targets a very specific part of the market. Here's my take. San Diego's new construction market is holding firm, obviously, even while the rest of the country hits the brakes. And this is a sign that despite affordability concerns, our region is still one of the most resilient markets in the country. This could be interpreted as a signal that our prices here in San Diego may hold rather well versus declining over the next 1 to 3 years, as many people hope. Now, I'm curious to know your thoughts in regards to the affordability issue here in San Diego. Is it something we're stuck with and it just is what it is? Or do you think a significant market shift is on the horizon that will directly impact affordability? Let me know your thoughts in the comment section below, and let's see what everyone has to say. Now, let's move on to a recent report by Realtor.com about how the millennials are not intimidated by current market conditions. Nationally, we're in a bit of a gridlock. Realtor.com released a fresh consumer sentiment survey, and the results confirm what a lot of us have been feeling out in the field, that the lock-in effect is real. Over half of all homeowners in the entire US have mortgage rates under 4%, and about 82% of homeowners have rates under 6%. So naturally, they're in no hurry to sell because trading that for a 7% interest rate doesn't make a lot of sense. And according to the data, almost 1 in 3 potential sellers saw that they feel locked in and aren't planning to list unless something changes to rates.
That sounds perfectly reasonable.
But here's where things get interesting. Guess what makes up the majority of those still looking to buy? They're millennials. According to the same survey, nearly 1 in 4 millennials plan to buy a home in the next 6 months. That's a huge jump from just 15% last fall. Meanwhile, only 14% of all adults surveyed said that they plan to buy. So millennials are clearly leading the charge, even as everyone else is backing off. Now, when it comes to financing a home, personal savings are still the primary source. 58% of buyers say they're tapping into their own cash to make that happen. But what surprised me was how many are planning to use their retirement accounts or personal investments to get across the finish line. We're talking about 1 in 4 pulling from their 401ks, IRAs, or using security-backed loans. That tells you just how committed buyers are, even if it means sacrificing long-term growth to secure a home now. And here's another data point worth mentioning. When asked what mortgage rate they need to see in order to consider buying, the vast majority said that they need to see something under 5%. Only 2% of those surveys said they'd consider buying at current interest rates. But about a third said that rates don't really impact their decision at all. But that leaves a large majority of buyers still waiting for the magic number before jumping in. Now let's put a San Diego lens on this for just a second. Here in San Diego, this lock-in effect is even more pronounced. We are a high-priced, high-equity market. Most homeowners bought years ago with great rates and have seen massive gains in equity. If they don't have to move, they're staying put. That's why our inventory remains so tight, sub pre-pandemic levels, even while demand has softened nationally. We are barely over 6,000 homes, as I reported in my last San Diego Market Matters. And for buyers, especially millennials trying to break into the market, this creates even more pressure. Prices aren't falling off a cliff. Inventory's growing, but it isn't overflowing, and the cost to borrow is high. Yet buyers are still showing up and trying to find a way to make it work. Just like I referenced, practically 25% of millennials are not being deterred by current mortgage interest rates. So what does this mean for you? If you're a seller in San Diego, the lock-in dynamic is a type of protection. It's why the market isn't being flooded with listings, and that keeps prices relatively sticky. If you got a reason to move and you price it right, you've still got a shot at a solid sale. This lock-in effect goes beyond homeowners not selling though. The data clearly shows that when rates go down, it will unlock a wave of buyers eager to get in while it is still relatively affordable. And before you drop a comment in the comment section below about my use of the word affordable, calm down. I said relatively affordable. If you're a buyer, especially a millennial, you're not alone in this market. People are getting creative, tapping into retirement accounts, using personal investments, and in many cases, those who are buying now are banking on rates coming down in the next few years so they can refinance later. But in the meantime, the biggest hurdle is still affordability and a sufficient down payment. So what would it take for you to jump into the market? Is it a specific rate, a better inventory selection, or are you already in the market trying to make the math work? I'd love to know. Drop your thoughts in the comments below. And if you're still wondering whether right now's the right time to make a move here in San Diego, let's talk through your options. Everyone's situation is different, and I'm always here to help you find the best path forward. And that's a wrap for this week's San Diego Market Matters. If you haven't subscribed yet, here's your opportunity to do so if I won you over during this video. If not, give me another chance. Hopefully I'll catch your interest with one of my other videos, which should have popped up in one of these corners by now. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.